Scott in Mississippi. You're on Winning at Life with Gregory Ricks. How can we help you, Scott?
One kind of a thought I'd like your opinion on, and a question about short-term investments in PMs because of the volatility of the market right now.
Well, gosh, is the market really volatile right now? It's setting record highs. Yeah. And remember, it doesn't go up every day, but
well, I guess with the February, March drop, that I missed the perfect opportunity to get into the market and double my money overnight.
Well, I don't know about doubling overnight, but is that the last correction? The last of all time? It's just the market set record highs, moved up until it wants to pull back again. And I think the number is every 1.83 years, we have a correction, a big one. And this thing comes along ever so often. Now, what was tremendous about the last one is how fast the market came back. If we go back to the Great Recession, whoo, that took a pretty good bit of time. So it's not like you can set aside in cash, throw it in there, and this thing is going to look good for you in 6 months. That's going to take some time. So I don't sit around and look for opportunities only like, okay, I'm going to sit around and wait. Let me get 2 years. We should be somewhere another correction and throw all the money in and like, okay, yeah, a few months, I'll double my money. It doesn't work that way. What you have to have is balance in your portfolio. And you could, be harvesting cash, harvesting profits, having some liquidity that maybe you could push additional money into that and take advantage of some of those opportunities and maybe add a point or two over time and increase your over return with some good decisions there. Metals, once again, don't pay a dividend, and I think they're more inflationary tools. And once again, if we look over the past 10 years, they've not performed well. Gold, silver, and some of those others have not really performed well up until late, but they don't seem to be the doom and gloom tools either. So if you put money in metals, and I'm not a big fan of it, honestly, you really should minimize what you do there, because you ought to take a look and compare the metals to, say, the S&P 500 over the past 10 years. I think you might find that an S&P 500 ETF might fare better for you. Thanks for the call, Scott.